Hey friends, welcome back to the channel. My name is Sanj and today we're going to look at two crypto ETFs that have recently launched here in Australia, from BetaShares and one from Cosmos. And this is quite exciting because I guess it's two worlds colliding, of crypto and the world of ETF investing. Now I've had a few requests for this, so thank you from a lot of you who have posted on various comments saying, hey, can you do a video on this topic? I was kind of hoping to wait until BetaShares had released a couple more. I think there are rumors that they might have a couple more ETFs coming out, which I'll touch on later in the video. But in this video, I'm going to go through a bit of a side-by-side comparison. We'll look at the holdings, and we'll also look at some of the comments around risk or some of the documentation around risk. Because, look, crypto is a very volatile asset, and I think that's why it's considered risky, and some people don't even want to call it an asset. Fair enough. And look, a couple of disclaimers. I'm not a financial advisor, so you should definitely do your own research. And the companies have made it quite easy. There's quite a lot of documentation around it, both explaining the risks, but also some of the narrative behind why crypto could be something you're interested in purchasing. So when we look at these two ETFs, the strong narrative behind them is, number one, and you'll see in the documentation, is when you buy these ETFs, you're not buying ETFs that are investing in the underlying cryptocurrency, coins. What you're investing is in essentially companies that operate in the cryptocurrency space. And BetaShares describes it as everything from the full breadth of the cryptocurrency ecosystem, investing in pure play crypto companies such as exchanges and mining companies, all the way through to companies whose balance sheets hold at least 75% in crypto assets, and also some companies like MicroStrategy, which have quite a lot in terms of crypto, but doesn't really operate in the crypto space. And the second ETF is from Cosmos, the Global Digital Miners Access ETF with the code DIGA. And they sort of say they're looking as well in the Bitcoin space and sort of describe it as buying companies that are selling the picks and shovels, but also doing the work. So they had those three dot points around companies that are solving the computational math algorithms, companies that are providing the blockchain infrastructure, and companies that provide the services around the infrastructure for blockchain and Bitcoin. So I haven't seen it specifically called out, and it may actually be in the documentation, but I think theirs is a little bit more focused towards Bitcoin, whereas the BetaShares one is just cryptocurrencies in general. So let's have a look at the table of comparison that I often do when I look at two ETFs, because it's often not good to look at an ETF in isolation. You want to see a couple of ETFs that are trying to do the same thing and how they compare. So on the left, we've got the BetaShares product, CRYP, and on the right, we've got the Cosmos product, DIGA. Market cap wise, easily the BetaShares product is it's got a lot more money in it compared to the Cosmos product. It's still relatively small in terms of, I guess, a lot of BetaShares products at 135 million. But, it is there. In terms of fees, you've got 0.67 against 0.9%. The DIGA product is it's quite high in terms of fees. But I guess this is often the trend when it comes to thematic ETFs, is they tend to have higher fees than sort of your generic ASX 200 and 300 trackers or your S&P 500 trackers. So it's high, but it's not what you wouldn't expect. The benchmark is effectively the list of companies that these ETFs are tracking. So BetaShares one is from Bitwise, the Crypto Innovators Index, and the Cosmos one is tracking the Global Digital Miners Index. It is what it is. You can look into the indexation methodology to understand exactly what rules they had in place, and especially the BetaShares. I think in the PDS, they did go into a bit of detail about the two key categories of companies that they've included, and I guess that's the focus on cryptocurrency companies and then companies that have a lot of crypto on their balance sheet. In terms of the number of holdings, at the time I did this video, BetaShares had 32, Cosmos had 17. I'll touch on this again when we look at the top holdings, but obviously BetaShares is saying in the documentation they'll take up to 30 companies into this. I guess it will be defined by what gets included in Bitwise in terms of the Bitwise index, but there'll be a lot more companies, it seems, in terms of the BetaShares product compared to Cosmos. Now, in terms of top holdings, if you're not really in the crypto space, you've probably not heard of a lot of these companies. So it's sort of the case: Galaxy Digital, Marathon Digital, Coinbase, MicroStrategy, Michael Saylor, you might have heard of him. It's like a CEO that started buying Bitcoin specifically onto his company's balance sheet, even though they don't really do anything in the crypto space. I think this was like 2019, 2020, around then. It was quite interesting. It was, I think, one of the, not the first maybe, but one of the few big companies that started buying and just putting it on their balance sheet. And he's done quite a lot of videos around, his narrative, his explanation around it, the journey he went on to come to this conclusion. I think it's quite interesting. It's all over YouTube. You just type in his name and have a look. Now, when it comes to the companies, one thing I like to do, especially when there's two ETFs that are doing something similar, is I like to look at the holdings just to see, is there any overlap? And I got on the tools, I did some Excel work. Here we go. And you can tell from the screenshot, I'm not the most Excel pro. But on the left, on this table, you've got all the companies that the BetaShares product is holding. And on the right, you've got all the companies that the Cosmos product is holding. And what's colored in red is the common stuff. So this is a standard duplicate search using good old Excel. And I often get this a little bit confused up, but bear with me. What I'm effectively trying to say is, if you buy the Cosmos product, 76% of the holdings in Cosmos are actually already in the BetaShares product. Whereas 41% of the BetaShares product has stuff from the DIGA product. I'll throw up this diagram. It's going to be a little shady, but you get the idea that CRYP will have quite a lot of, or DIGA will have quite a lot of overlap with CRYP, and CRYP will have a lot more companies within it. So that's just something to be mindful of. And I'm often wondering, if you watch a lot of my videos, I'm quite conservative, and the way my conservatism comes through is in the fact that when I look for an ETF to buy, I often, and if I have two ETFs to compare against, I'll tend to go with the ETF that has a larger number of companies in it. Because in my head, that means it should be more diversified. Now, there's research, I'm sure, that explains whichever direction, if I'm right or wrong, but regardless, that's the way I sort of look at it. So naturally, when I look at this, that's why my initial inkling was towards sort of the BetaShares product, because it has a little bit more in terms of companies, and if you buy it, you're effectively actually buying DIGA as well. And not to mention, you do get a slightly lower fee. Now, again, nothing against Cosmos, and I don't have either of these, but that's just something to call out, is you get more companies for a lower fee. Now, let's talk about risks and the documentation. Now, both the ETF companies have done quite a good job in terms of the documentation around it, because I guess it's a bit new. It's not your standard ASX 200, 300 tracker. BetaShares did a nice little document on the Investor's Guide to Crypto, and they went through a little bit of the detail. I'll leave links to all of this stuff below. And similarly with Cosmos, they had a few articles and some of their documentation where they explain a bit around Bitcoin and why they consider it an asset class. And I think they also had some additional documentation about why they think specifically Bitcoin mining stocks should be considered. And there's a lot of stuff in there that you can sort of read and get a feel for, especially if you're new to the crypto space. It's good that they're providing this to kind of help you get up to speed. Now, they also do take the time out to call out some of the risks, and there are a lot of risks when it comes to crypto. All types of investing have risks. Crypto has like additional risk, I guess you could say. And what I specifically like is some of the stuff in BetaShares documentation where they call that risk. And there's a lot of ways to describe high risk, but this is what they said. They said, an investment in crypto should be considered very high risk. And it goes on to describe why you're not getting direct exposure to the currencies, but you're getting exposure to the companies. Then there's that last sentence of that first paragraph. An investment in crypto should only be made by investors who fully understand the features and risks of such companies, or after consulting a professional financial advisor, not a YouTube person, but a professional financial advisor, and who have a very high tolerance for risk and the capacity to absorb a rapid loss of some of their investment. I mean, that you're going to be made of steel. You're going to be some combination of Andrew Carnegie and Andrew Forrest to be able to buy crypto, is what this is saying. I'm surprised the lawyers said that they could say a rapid loss of some of their investment. I mean, I'm surprised someone in their legal team didn't say, why don't just say all of your investment? Maybe the BetaShares team did some scenario analysis and said, look, we don't think, worst case scenario, they won't lose everything, so let's just say some. But, I mean, there you go. Risks are there. Please read the documentation. Also, I think in both of them, they did go into all the different types of additional risks associated with cryptocurrencies that you wouldn't normally get with an equities, sort of a normal BHP, Rio Tinto focused type ETF. ETF returns. Now, usually when I do this, I'll sort of throw up the ETF returns and we'll do a bit of a comparison. Couple of things on that. First of all, these ETFs have only just come out, so you're only really comparing the indexes or indices. in performance. But the other thing is these, cryptocurrencies are so wild and crazy. Like, you look at some of the graphs. So this is a graph, the cumulative returns. This is from, I think, Cosmos DIGA. And you've got the global digital miners index. That's the blue line, 1,217%, the Bitcoin price, 505%. And then all your usual indexes that you look at, the gold spot price, ASX 200, S&P 500, it's like, it's barely there. So I don't know what do you really want to talk about returns? Very high. That's the conclusion. Historically speaking, very high. But will it always be very high? Be careful. Another quick risk to call out is, and this came from an AFA article that I saw from John Collett, and he didn't make the statement, and I know I'm sort of showing you just a couple of screenshots of this article. I'll leave a link below. Definitely read it in your own time, the entirety. But he called out something that Chris Bryke, I think from StockSpot, he called out something around themed investments or thematic investments. And he said in that second sentence, he says, thematic ETFs usually launch when retail investors' interest is near its peak and the theme has enjoyed strong past returns. So you do need to be a bit careful with this, and it sort of makes sense that everyone's been talking about crypto over 2020 and 2021. There's a lot of interest. Everyone knows about it. People at the gym are talking about it. People at cafes are talking about it. That's usually when it's very mainstream. And it makes sense that BetaShares and Cosmos would come into the Australian market to say, hey, if you want to invest in this thing, in a indirect way using ETFs, here's a great product to do it. Does that necessarily mean these ETFs or these investments will go well into the future? Maybe, maybe not. It's hard to know, and especially thematic ETFs. It's great for a period. Like BetaShares brought out some stuff around robotics a while ago, artificial intelligence. I haven't checked how they're going. Maybe they're going well, maybe they're not. But you just got to be careful. The ETF companies, I guess, it's good for them to time it around when everyone's talking about something. It doesn't necessarily mean it may be the best time to invest in something in terms of its investment cycle. So just be wary, obviously consider the risks and probably take a long-term view approach if you are going to look at an ETF like these. Now, what I actually wanted to do was do an ETF video where I talked about both the BetaShares product, the Cosmos product, and also the Bitcoin ETF and the Ethereum ETF, which according to a couple of articles out there, apparently ASIC has given approval for these ETFs where you will be actually holding the direct currency rather than companies that hold the currency. So Bitcoin and Ethereum possibly from BetaShares. So I think that will be interesting. I'll definitely do a video on that because that'll be a nice kind of comparison. Kind of reminds me of the video I did a while ago on investing in gold, and I think at the time I said there were 3 ways. You can buy gold directly, you can invest in companies that do gold mining, or you can invest in ETFs that track gold mining companies. What I didn't say was you can also invest in ETFs that track the gold spot price. And, we're getting to the point where if BetaShares or whoever brings out these Bitcoin and Ethereum specific ETFs, we'll get to a similar situation where you can effectively buy Bitcoin directly by, logging onto a CoinSpot or a crypto.com type account. You can buy companies that operate in this space, a bit like buying mining companies, or you can buy an ETF that tracks crypto companies, or you can buy an ETF that tracks Bitcoin spot price type thing. So I think that'll be interesting when it comes out. And that's it. So please do consider subscribing to the channel. Definitely when more ETFs in this space come out, I'll do some more videos, sort of adding to this comparison table and seeing how it grows and seeing what space these different ETFs are going to operate in. And I'll see you in the next video. Bye for now.